Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 28th of October, comes to you from Dubai. And as of tomorrow, I will be heading home, and so Charts Today will be coming to you from London next week. We start by looking at the screen. We see a lot of red on the screen, and we've had some pretty big falls in the US on tech. So we'll look at that. So just tells us straight away at a glance that we've got a lot of red on the screen. We start by looking at currencies, then at stock market indices. We'll look at some commodities, precious metals. Some of the tech stocks we'll pay special attention to today, and we'll look at energy last of all. So looking at the dollar, it has just come back and tested this 110 level. That was the level we tested at the beginning of October. It's a pretty critical level. We did actually just fall through it here. We see that on the 60-minute chart. Remember this is a weekly, daily, and 60-minute, my long-term, medium-term, and short-term view of the market with the corresponding point and figure targets. The trend is still very much up on the long-term chart, but this 110 level now is pretty critical for the dollar, and we do have this potential here for the lower high, lower low element. Too early to say it's the end of a trend, but of course that's what we're looking just to watch out for. And short-term, we have been bearish, but we are coming back above the cloud there. These downside targets not being reached is bullish confirmation, and this target to 113 was actually passed, so that is bullish confirmation as well. Upside targets passed, downside targets not reached, bullish confirmation. Looking at the euro, we're back below that parity level this morning. We did touch the 101 level, but just couldn't hold it. So that's a level now to watch. If we can get back above that level, that would again signal we're seeing that a little bit more clearly here. The high, then the higher low, and then the higher high. But we need to really get through that cloud. The Japanese yen, of course, we've seen a lot of intervention from the Bank of Japan, which has shown up in the charts here, and that 150 level, you can be pretty sure that's the level at which the Bank of Japan is buying yen at. So looking at that chart, that's just what we're seeing there as the intervention. Against sterling against the dollar, it's sitting at 115. The market's pretty much liking Rishi Sunak as the new PM and holding those levels. And if we look against the euro, just below that 116 level. So again, similar rate, of course, because we are nudging parity with the euro dollar. So quite interesting that we're just seeing that sort of bullish move there. Targets to 119.60, 122, 117.80. These targets all activated. 1 to 122 activated as well. And if we look at Bitcoin, we are just holding the $20,000 mark, but not enough really to move the dial on these long and medium term charts. Still below the cloud, still bearish. Now the markets, of course, we saw the S&P 500 index down yesterday. The Nasdaq was down as well, but the really key thing is what will happen at the open today. And we got the S&P mini down 1% and the Nasdaq down 1.3%. We saw Amazon down 20% in after-hours trading, and also Meta, Facebook down very heavily. So we are seeing the tech giants being heavily hit. So that's going to be something to watch. The FTSE future is down this morning, down just under 1%. The market's really pricing in these moves on the US market that are likely today. Looking at the DAX in Germany down 0.8% there on the cash market. Can we hold that 13,000 level, having got back above there? But the reality is we are seeing this pattern of lower highs, lower lows, lower highs, lower lows. That is bearish. That is a bearish trend. Japan was down 0.5%, and the Hang Seng was down another 4%. This market has really been tumbling, and again, we've been very bearish on Hong Kong for a long time. This was really the first of the markets to really look really bearish, and of course, we're just below the cloud, and we're just seeing prices just hitting these targets. These targets have been in place for ages. Looking at the Chinese market, we're down 2.25% there as well. Market's fearful, and the really key thing is we've closed at a low that's really a 2.5-year low. So that is really significant. Today's move in the Chinese market at the end of the week is just taking us back there. We did see that's in terms of the weekly close. On the daily, we did see prices that actually were at those levels back in April, but really we're seeing that capitulation. Targets to the downside are around 6% lower for China, so Don't be surprised to see that happen. The Sensex bucking the trend, just can't break the $60,000 mark, which 60,000 point mark, which would activate these upside targets some 35% higher. But as markets go, this is one of the better looking markets, still bullish on the medium and long term charts and the short term charts, so really looking quite good there. That is one market bucking the trend. The Aussie market down just under 1%, and so we are just seeing a deterioration there. The key thing is holding that 6,500, 6,400 level on the ASX 200. We'll look at the energy mix in a minute, but just looking at some of the soft commodities, we're seeing some demand destruction really just coming to the fore. Sugar down slightly, wheat down 1%. So we are just seeing a real move back here. Markets just really fearful of demand, and really what we're seeing here is that 830 level really just coming under pressure there for wheat. Gold sitting at 1651, just can't get back above that 1700 level, so we are still bearish on the medium and long-term charts. Of course, the long-term cycles for gold are very, very powerful, but we have seen upside targets really been negated on the charts, so that's not great news there on the 1%. So we are just seeing gold really just a mixed picture short term, and the longer term picture is not as good. We need to break 2,000 on gold for gold prices to run, 2,000 US, that is. Silver back below the $20 mark, so again just really struggling there, and we are short term. We've had a better week, but we really just can't break higher, so just it's what the charts say. Palladium actually bucking the trend a little bit, is up 0.5% and has just been building a little bit of a base, but then that just broke away as well. So quite a few false dawns there. Taking a look at US 10-year yields sitting at just under 4%. So we have pulled back a little bit. We've had a week where we've just fallen lower there. Now looking at the tech stocks, Apple sitting at 144, the most resilient so far of the tech stocks. If we break below the 130 level on Apple, that would be bad news. That would be a new low. We do have all these downside targets, though, only an upside target that's not yet activated, and that would only be activated with a move way back above 174. So we do have these downside targets below the 130 level, and of course that would be a new low for Apple, and that's really the big stock holding the market up at the moment. Amazon, as we mentioned, we've got this 20% fall in after hours trading. We've got downside targets here to 98. That's been in place for ages. New targets kicking in at 84. That's 24% lower. Don't be surprised to see Amazon trading today in that sort of territory in the 80s, because that's where the targets are. So we just can't ignore those. Looking at some of the other tech, we've got Alphabet. Of course, they had a bad bad announcement out this week as well. They've fallen away. That's what happened the following day, because they announced these calls after hours, and we are bearish on all three timeframes there. Downside targets being given and met. Microsoft also had bad guidance out in the week as well, fell away, and is below the cloud on all three timeframes. So you just can't ignore that. Meta had really big falls yesterday, and these targets have been in place for Meta for ages. We've just seen all these targets. Look at that. These targets here were given right back there, met. New target given. This was given back in April, a target to 101. We closed just below there yesterday, 6 months later. Got a new target to 87, another 11% lower. You just cannot ignore the targets there. Tesla, we're seeing also just actually holding better than most tech stocks. Really, that $205, $200 mark is really critical for Tesla. So that's something to watch as well. Of course, you can do this on any chart you like. So you could just have any list of stocks and you go through any chart you like, just getting this instant gratification of what's really going on. Now, looking at the energy mix, we've got Brent crude down 1% this morning. We've got emissions breaking that 80 level. A target that 84.30 was put in place this morning. We're already well on the way to that. We've got gas prices up 4.5% on TTF. Again, quite a lot of upside targets there, and our call was bullish for clients this morning. And we called German power higher as well, because we had this new upside target there. That's up for the day. Of course, we are still bearish on the trends there. That's it for today. Until Monday back in London, happy charting. Have a great weekend. See you then.